What's up, investors? It's the Russian dude. Welcome to another episode of Communistic Capitalism. And today I will be talking about why Netflix and Peloton, specifically these two companies, are down so extremely so much. And these two companies will be just an example, because the conditions on the stock market basically are different for every single company. But it is possible, let's say so, to generalize and put some of the companies, especially cool kid stocks, into two categories. And these two categories I will be explaining on the, once again, example of Netflix and Peloton. And just going ahead of myself, I will say that Netflix is the group of companies, let's say so, group A is Netflix. And these are the companies that are relatively good, that there is demand, that people use their services and products, but the stock was just so much overvalued. So obviously, as soon as something bad, as for example the subscribers growth slowed down, obviously the stock price went down. And the second group, which you're gonna call Peloton group or Palantir group, whatever you wanna call it, these are the companies that are not so much, let's say so, used by the people. Yes, people know about the company, about the stock specifically, because this was one of the cool kid stocks that every single person was buying and saying, Peloton is gonna send people to the moon, Peloton is gonna send people to the Mars. This is like the one and only company you need in your entire portfolio, just Peloton. And these are the companies that, yes, they exist, and yes, they might have some kind of decent, good product or service, but just investors literally simply saying, overestimated the potential of companies so much, putting the share prices so high, and as a result, obviously, as soon as, once again, something bad came, like for example Peloton, I will be going over this news later as well, but to summarize, like first couple of minutes, Peloton said that it might need to stop the production of its bikes, which is obviously as bad as it gets. The company stops producing its main, literally, product. So how worse than this it can get? So long story short, this is another group of companies, group B, which we're gonna call a secret word Peloton. And basically these are the companies that are maybe decent or maybe not so good, but they're so much overvalued that obviously as soon as something bad appears, as soon as something bad happens, the stock will just plummet like 40% in 1 month easily. And this is exactly what happened. So, okay, let's begin. The beginning of January, the Nasdaq performance as of beginning of this January is the worst performance, literally, I'm not even kidding, the worst performance since January of 2008, which happened 14 years ago. This is the worst January we're seeing right now in 14 years. And this January 2008, it was the January, it was like literally in the middle of the great financial crisis. So it was already acknowledged that we are in the crisis, and it was so bad. Right now, technically, we're still not in crisis, not in correction, not in crash, and we're already as bad as during an actual crash 14 years ago. So basically what I mean, just imagine if things get even worse, as soon as indices start going down, as soon as like these monumental big companies like Apple, Amazon, Google, all this kind of stuff start falling, just imagine how much lower we can go. And this is just the beginning of all this happiness, of all these incredible times we are living in. And just good idea, after watching this live stream, go ahead and watch my last video, which I uploaded today. It is basically called, I think, This is Why the Stock Market is Crashing. And this is where I'm explaining, since I'm using the book in my video and I'm basically referencing to this book. And this book focuses on the history of stock market manias, crashes, corrections, all these kind of things, starting all the way from 17th century, which was the tulip mania. Then it went about South Sea Company, a Japanese bubble, railroad mania, and the book was written, by the way, in the middle of dot-com bubble. So basically the writer at this point was comparing what was happening in the market at that time to the previous crashes, and he found all the similar reasons, all the similar phenomena that so many new investors who do not know anything about investing in stock market, putting so much money just because the stock is going up, for example. New asset classes, like for example at this moment these are NFTs and some of the digital cryptocurrencies. Not saying all cryptocurrencies are a scam or bubble, but some of them, and I would even say majority of them, to be honest, will not survive the decade or something. Okay, and based on this book, I'm explaining how all these crashes, they start, how they happen, how they end, and what are the consequences after these crashes. The video is like 10-11 minutes, so stay for now on the live stream because it's going to be very important information I'm going to be talking about. And after this, watch this video and you will see that right now so many things match. And I've been talking about stock market crashing basically since August, I think, if I'm not mistaken, August of 2021, which is more than half a year ago, I think, if I'm not mistaken. And this is exactly what I was expecting. This is exactly what starts to be happening. My first reasoning, my first detail about the crash was that probably as soon as the bad reports start coming out, or for example, when all these cool kid stock companies start reporting slowdown in growth, or like less subscribers, or maybe halting the production, this is when smaller companies start falling. This was my first step of the crash. My second step of the crash was supposed to be that bigger companies will start going down. Because if you remember from my past live streams, we were seeing that majority of companies on the US stock exchanges, they are already in bear market or in correction, meaning that they're down for like 10, 15, maybe even 20+% down from their all-time high numbers. So but indices like the S&P 500, the Nasdaq, they're still relatively at least flat or not going down as much. And the reason for this is because so much weight of these indices is concentrated in like literally 5-10 companies, which you all know about once again. Facebook, which is Meta, Amazon, Apple, Netflix, Google, Tesla, even this Tesla. So all these companies are the ones that still keep the indices relatively flat and resisting all these temptations to crash. So my second stage of the crash, I was saying that as soon as bigger companies start crashing, they will start pulling indices down with them. And this will create the chain reaction on the stock market. More and more companies will start going down, investors will start to take their money, try to save their money, because according to this book, which is once again, I'm talking about this in the video, one man selling triggers another man's fear and he starts selling as well. Basically chain reaction of selling, panic selling. Right now, the ones who are selling, and I'm talking about individual investors, are the ones who are less risk tolerant, who has the least risk tolerance. The ones who are like, as soon as the price goes down like 2-3%, they're like, okay, that's it, I'm out, I played enough, I got my money, I got my experiences, I'm out. But what happens when the prices will go like 10%? Then already some other people will start like, okay, 10% is pretty big. So, but still, more than half people will still remain in the market. But what happens when the market goes down 20%? But what happens when the market goes 30%? There's a specific number for every single person, investor, trader, speculator on the stock market, that as soon as he reaches this certain loss inside his portfolio, which is at this point is going to be just paper loss just on the computer screen or on the phone screen, because as soon as you don't sell it, you don't realize the loss. But there's a specific number for every single person that as soon as it's reached, that's it. Even this person will sell. I don't know, I haven't reached this number yet. My portfolio is well diversified, so it was not growing like crazy last year, but it is not falling crazy these times as well. I'm not sure right now, I'm still figuring out how to connect my iPhone or iPad so I can share the screen. As soon as I do, we can go over my portfolios. I think it's going to be maybe next stream or within a month. Then we can see my portfolio. But if I'm not mistaken, once again, I told you that Nasdaq is down 8% plus already since the beginning of January. My portfolio is down maybe around like 1-2% for now. So I'm resisting. I was not growing as much once again, but I'm not falling as much either, which is good. Because besides wealth accumulation, you need to preserve your wealth as well. Okay, and now I think it's good time to switch to Netflix and all these kind of companies, basically the topic of today's video. So yes, first of all, let's talk about Peloton. Peloton stock plunges after company temporarily halts production of bike and treadmill products, which is literally the main product, the main things that Peloton produces. Just for the past month, and I'm not even looking at from its all-time highs, Peloton is down almost 30% in the last month. We can put 6 months, and here we can see 77.5%. Let's make it clear, like 77%. In the last half year, Peloton price went down by 77%, which basically means if you have invested in Peloton $10,000 6 months ago, you will have right now $2,500. I hope you didn't, because I was talking about Peloton, Tesla, Palantir. What was the second company for? Not Netflix, but these three companies, Peloton, Palantir, and Tesla, and Robinhood, are my all-time 4 favorite companies to use as an example of the stock market mania that we're seeing right now. So this is my first example. I was talking about this company a long time ago, that it doesn't deserve the valuation it has, and basically now we see that the market finally starts to catch up to the reality. The company that produces bikes with iPads cannot be, I don't know, life-changing industry. Yes, the product is cool, it's nice, but still it's premium segments. Like, these bikes, they cost thousands of dollars, so it's not like every single family will have these bikes in their house. This is the first thing. Second thing, every single time I was walking around in the mall, here is a story. Okay, here is a very quick fun story. So ever since the beginning of pandemic, as soon as they reopened the malls, I was going around once, maybe twice per week to the mall. Just like, you know, these open malls where you just go inside one big building and there's like stores on the left, stores on the right and stuff like this. So they had Peloton retail store inside. Retail store basically means that you could go inside, speak with people, try this equipment, try these bikes, ask for an advice, compare prices, order, buy, stuff like this. So it's physical. You can go inside and you can physically touch the product. Every single time I was going around the mall, I went to see Peloton store. Not a single time I saw people inside. There was not a... And I went basically to the mall like 20, 30, 40 times maybe total. Not a single time I saw at least one person inside Peloton store. And people might say like, well, it's 21st century, people buy things online now. Okay, here's my another example. You all know GameStop. Let's distract ourselves from the GameStop share price and just focus on the GameStop as a company. So long story short, this is the company that sells like video games or like this collectible statues, Pokemon cards, like everything more or less video games related, let's say so. Even in GameStop, and you can agree that 95% of people who play video games, the last time they bought actual disc with the game was like 10-15 years ago. The last time I bought disc with the game when I was still in school back in Russia, which was more than 10 years ago, was the last time when I bought actual physical disc copy. So all the time I'm buying games right now, which I don't usually do, but every time I do buy them, it is online. That's it. There's Steam, there is like Blizzard app, Battle.net, I mean, like there's a App Store. All the time we buy these games online. But still, even in GameStop, in real life, in retail store, you can always see people inside GameStop. And Peloton is the thing that's cost thousands of dollars. So of course people would want to touch the product before spending so much money. People want to see how cool is this, what's the resolution on the iPad or whatever this monitor is called. Talk with people, see how easy it is adjusting, I don't know, whatever. But when you're spending so much money, of course you not just go online, just make 2 clicks and that's it. You just spend $5,000 and you bought the bike that you're not even sure you needed. Because that's another thing. My family, my mother, she had a bike, she used it maybe once or twice in her life. For the rest of the life of the bike, until I think we donated it, it was just basically a place where I was putting my clothes, my t-shirts, my pants for them, because I just didn't want to put them in the wardrobe. This was the collector of dust, if you wanna call it like this. And the same thing happening here. People bought Peloton, most of them they used it for like 1 month, 2 months, and then that's it. It just was the decoration of the house. There was no more use for these bikes. You go on Facebook Marketplace, on Kijiji, on eBay, so many people reselling their Pelotons, because that's it, it's so much money they've spent. They used it twice, and all of them you're gonna be seeing they're like brand new, or like almost like new, because people just never use them. And that's the thing. So Peloton sees that the demand decreases, but supply still kind of exists, the producing, and these are pretty expensive bikes, don't get me wrong. And as a result, the news came that says, once again, Peloton stock plunges after company temporarily, at least for now, halts production of bike and treadmills, which basically means that it stopped producing its main source of revenue. What would you expect after this to happen? Exactly this. The stock goes down by 30% almost in one day. And every single activity you can see right now, for example, as soon as the stock price went down by like 25-30% in one day, I think yesterday they announced it, if I'm not mistaken. So just today the stock price went up by almost 12%, which means that this is just a pure speculation. People just like, okay, the company went down so much, most likely it's gonna go up because people will realize they oversold it, so I'm gonna buy it, and then they see the price indeed starts to go up, and then more people buy it, and this is just pure speculation. This is exactly the same thing that was happening with, once again, all these GameStops, AMCs. People were just participating in the growth. But these things, they only lasted like maximum 1-2 weeks. And after this, the price was gradually going down and continuing its downtrend, which was supposed to be like this since the beginning. So right now we might see a little bit volatility, not even a little bit, a lot of volatility in Peloton. Today it went up by 12%, tomorrow it's gonna go down by 5%, the next day it's gonna go up by 3%, the next day it's gonna down by like another 10%, let's say so, theoretically. Of course I'm just coming up with these numbers from my mind. And there is another thing, that on February 8th, Peloton reports its results. This is, I think, will be the last nail in the coffin of Peloton. Because I'm definitely not expecting Peloton to even maybe come close to its projections, to analytics projections. I think that the report will be as bad as we would imagine it to be. Especially because gyms are reopened, like countries are reopening, people start working out in the gyms finally, working out outside if it's not too cold, or are running, and definitely not using Peloton bikes anymore. So I think this will be the last nail in the coffin. Peloton will experience another maybe 20% drop after the earnings report. Then it's going to be once again a little bit more volatility. And after this, the stock will completely die down and it's going to be trading around, so my fair valuation right now, it's around 9 billion market capitalization. I think that it deserves around 6 billion. Now I'm not going to go into calculations because it's going to take another 15 minutes. Just trust me on this one, I did my homework. I think that the fair value of Peloton is like 6 billion, which means that the price is supposed to go down by additional like 30%, I think. And 30% of $27, once again, just rough estimations, it's sub $20 stock. So I think Peloton will be somewhere around like $18-19 after the report, and this is the price when it's going to get stuck for a long extended period of time. Okay, now let's see Pete have some questions. Sorry for not answering for so long, I just got carried away so much. I love talking about stock market crashes, as you can see. Okay, Sup, even I knew Peloton would fail, and even after knowing about it while it was failing. Exactly. I never shorted stocks in my life. I'm pure 100% investor. I never traded. The fastest me buying and selling stock, it was maybe like 6 months. So I never bought and sold stocks earlier than 6 months of owning the stock. So I'm never trading, so obviously I never shorted the stock. But if you ask me 6 months ago, and I think I did mention this during my past live streams, I said that one of the companies that I will definitely 100% short sell would be Peloton. I didn't do it. I'm not feeling fear of FOMO about this. I'm not like, okay, I should have done it, because once again, I'm an investor, very much strong to the core investor, so I'm not feeling bad about it. But this was one of my 100% shorted stocks if I did it. And then Pete says, people want to be lazy at home. Exactly. I bought this like small exercising, so here's a story from my life, so to be more related, to be more connected. Because I'm not just the guy on the screen, you are not just this camera standing in front of me, we are people, we are humans. So you are watching me, I'm talking, we're interacting, even though we're maybe thousands of kilometers apart, but we are real people. So let me tell you a story from my life. I like going to the gym, I like exercising, I was playing hockey since I was like 6. But whenever going to the gym is extremely hard. The hardest thing about going to the gym is going to the gym. As soon as you're in the gym, this is when you're okay, let's do this, let's fool around, let's do some pull-ups, let's do some push-ups, whatever, let's do some dips, let's use some barbells. This is when it's good. The hardest part about going to the gym is going to the gym. I always knew that if I had gym at home, I will like literally exercise every single day. And whenever I never had gym at home. Now I kind of have just one equipment. I'm gonna talk about it in a minute. But before this, when I was in Russia, when I was in US, when I was in Canada, I was going to the gym, like to the one which is actual gym. The longest I lasted maybe was like 1.5 years. Back in Russia, I went to the gym for almost, I would say, 2 years, like 3 times per week. So I was kind of determined. I was never a bodybuilder. I never had big arms or anything like this. I was just being in shape. But once again, I always knew if I had this gym at home or some kind of equipment, I would like exercise. Like, what's the problem if there's equipment in the next room? So what's the problem of not exercising? So I thought I will do it anytime. So in the beginning of this pandemic, approximately I think in May of 2020, if I'm not mistaken, once again, I bought this like deep station. I don't know how they're called. So this is the thing that you can use for pull-ups, for dips, for like ups. So this is like pull-up bar with like some additional things you can use. And this is what I was thinking, that it's everything that I need. I need pull-ups for my biceps, for my back. I need dips for my chest and triceps. And I can do ups, once again, ups. And for me doing like legs exercise, I can just take some bottles of water and do squats. So basically that's all I need. And since then, since May 2020, I don't think I ever skipped any single week, unless I was maybe like traveling or we had guests staying. So for every single day, even when I was sick, I was still exercising because it's like literally in my living room. So why not? So here is the story of my life. Okay. I hope you enjoyed it. So now Pete says that check Microsoft buying out Blizzard Activision. Yes, I heard this news, Pete. So this is pretty interesting. So one of my favorite games of all times, another story of me. So once again, being not just person on the screen, but actual person. I do play video games. I used to play them in the childhood so much. One of my favorite ones was and is World of Warcraft. Hopefully some of you heard about this. This is the game that I think I played the most. The game where I met so many friends. The game where I even learned so much of English, to be honest. And like, it's like just so cool. If you play this, you know what I'm talking about. So Microsoft bought Activision Blizzard, and this game, World of Warcraft, is one of the Blizzard creations. So we're gonna see what's going on, because one of the guys who was responsible for making WoW so cool was Chris Metzen. He was one of the original developers of the game. He left the company a long time ago. And since then, it was not as cool as it used to be. So if you know what I'm talking about, WoW has expansions like Burning Crusade, Wrath of the Lich King, Cataclysm, Pandaria, all this kind of stuff. So I stopped playing somewhere around Draenor, which was like 2014 if I'm not mistaken. Since 2014 I haven't been playing. I played maybe like 1 month, then I'm playing a little bit from now and then right now in the evening sometimes. But long story short, I'm not playing as much anymore. And the reason I'm playing now is because they resurrected the original game, the game that everyone loved, the game that Chris Metzen developed, basically, the one that everyone came together, was speaking about this particular part of the game, these first expansions, the original WoW, Burning Crusade WoW, and I'm hopeful it's going to be Wrath of the Lich King WoW eventually at some point in the future. So Microsoft acquired them. I have no idea what's gonna be with the games that they're producing. I heard also that they're producing Call of Duty like every year, and this is one of their biggest revenue generating machine, the Call of Duty. Can you imagine producing every single year new Call of Duty? And this is funny fact about it, by the way. In the past, Call of Duty was mainly like campaign game, offline game. So you're like in the Second World War, you're playing, you have objections, missions, you have to do something, and then it basically that's it. You just play offline game. Then they started adding multiplayer. So it was offline game, campaign, and then there was like possibility to play online. Then they started focusing more on online gameplay, which basically means the campaign was like literally something you can finish in one night, and the rest you can just play online. And recently, Call of Duties are only online, so there is like literally nothing. There is no instructions, there is no like tutorials, nothing like this. You can only play online. So basically, which means you're thrown with like professionals, with people who destroy you. Unless you played Call of Duty, you're literally gonna be obliterated. You're not gonna be able to do anything. So I played Call of Duty like back in like 2016 or 17, maybe with my friends back from the USA, couple of months. But like it was very strong learning curve. It was so hard to play against this, not millennials, because I am the millennial, like Generation X, Generation Z, they're so professionals. So basically we just gave up. Okay, the next thing that Peloton was crazy. Okay, Pete Criswell says Peloton was like that crazy project from that crazy blood test lady. At least Peloton was healthy. At least Peloton was healthy. But nothing can combat, I would say, the strongest two emotions that every person feels is the feeling of laziness and greed. I don't know, this just came to my mind, just like, I didn't give any thought about this. But being lazy is just like so easy. It's like, it takes so much to build routine, to build like exercising habits, but it takes so little to break the routine, and that's it. You're just back to basics, back to square one. So like you can be exercising for 2 years, and this is exactly what happened. Once again, another story from my life. Exercising for 2 years back in Russia. I just didn't go to the gym for like maybe 2 weeks, and that's it. After this, I was like, well, I'm not going to the gym for 2 weeks already, so let it be just 1 month, and then I'll go, and then that's it. I don't think I ever went back to the gym back in Russia. So that's it. This is how 2 years of habits can be interrupted by 2 weeks of absence of routine, let's say. So this is what happened with me back in Russia. Okay, and so yeah, Nuketown, I remember this map. Yes, I remember, and now Pete says, my stocks are in the TFSA, I can't really trade. I feel it, bro. So technically you can trade TFSA, and this is just for my Canadians listening, Canadians watching. TFSA is the equivalent of Roth IRA for Americans. Basically, you deposit money, and everything that happens inside TFSA, I wasn't about to say stays in TFSA, but this is too cringe, but everything that happens inside TFSA is tax-free. So you receive dividends, you sell stock for a higher price that it was originally purchased for, you don't need to pay taxes on this. The only thing is that there are contribution limits. And this year and past year and even year before this, the contribution was $6,000 per year. So you deposit 6,000, let's say, so here's a perfect example for you, Pete. You can trade inside TFSA if you want, because once again, everything that happens inside TFSA stays inside TFSA, you don't need to worry about this. If you deposited $6,000 and you made in 1 year before next contribution limit arrived, you made inside this TFSA $10,000, so now your portfolio is $10,000. You can sell the stocks, get this $10,000, don't withdraw them from TFSA. You can just keep cash inside your TFSA, and you can use this $10,000 that you have inside TFSA to buy more stocks, the one that you think might grow even more. So even though the limit is 6,000, but whatever you acquire, whatever you get inside TFSA, you can still use it, and it will all be tax-free. What you cannot exceed is the limit of deposit limit inside TFSA. So you cannot deposit the one from your bank inside TFSA more than $6,000 per year. The rest you can use, feel free to do it. Okay, I'm listening here. Okay, I grew up on Final Fantasy. I knew the game. I never played Final Fantasy. My school friends, they did. And I remember those like Cloud, you need to sharpen your sword, something like this. So never played the game, but I heard it's much fun. Okay, so interesting. Asmongold. Okay, I know Asmongold, the bald man, the guy who never washes his hands. Asmongold is the cool guy. I'm watching him. I started watching him. Another story. People who never played WoW will just leave the stream at this point, but it just became so cool, so much, so suddenly it's not anymore about stock market. Even though I will talk about stock market soon, so stay. Don't leave. So okay, Asmongold. The time I started watching him was during the original Classic launch, when it was, I think, 2018 or 2019, I think, yes, 2019 November, when the Classic was launched for the very first time. He had maybe one of the world-breaking live streams at that time. He was watched by 300,000 people. At this time, the whole total number of people who are watching WoW streams was like 1 million, and 30% of the entire WoW streamer viewers was in Asmongold's live stream. So cool. Okay, so Nuketown. So if I just don't take it out and reinvest it is okay, because I thought it was the big no-no. I know about my TFSA limits. This year was my first year contributing, so $75,000 free space. So I'll start with your second question, let's say so. So if you mean $75,000 free space because I'm assuming you're Canadian, so as soon as you became 18, TFSA limits, they start adding up. You don't need to open TFSA for your limits to start adding up. They will be doing this in the background. So let's say so, to make it simple, just to make it simple, every year, let's say so, the limit is $6,000. If you became 18 and you haven't opened your account, when you are 28, which is 10 years later, even though you haven't opened your account, but you just did it when you're 28, so 10 years passed, every year is $6,000 limit. So yes, right away, you will have $60,000 contribution room. This is correct. So if you have 75,000, it means you haven't opened, you haven't deposited anything in TFSA for a long time, and this is so good. But yes, everything that's happening inside TFSA stays inside TFSA. So once again, only care about deposits. And as soon as you withdraw money from TFSA, it deducts from your deposit. So let's say so, once again, another example. You just became 18. This is only for simplicity purposes. You can apply this to your situation. You just turned 18, so your TFSA limit is $6,000. You deposit entire $6,000 at once. And like 6 months later, your portfolio reached once again $10,000. And you can sell these stocks for $10,000. You keep cash inside your TFSA, and yes, you can use this $10,000 to buy other stocks. You can do it absolutely for free, easily, no problem. You don't need to pay taxes on dividends, no taxes on capital gains. And then let's say so, this $10,000 you invested, and 2 months later, suddenly you're lucky, this became $25,000. Yes. You still can sell this, keep $20,000 in cash inside your TFSA, use it again to buy it, no problem, don't worry. This is the first thing. And second thing, let's say so, your deposit limit is $6,000, your portfolio became $10,000, and then you withdraw $2,000. And by withdrawing, I mean you take it into your bank account. So this is the money now that you actually want to spend. So you withdraw it from TFSA. We withdraw $2,000 and $6,000 is the limit. So you take this $2,000 out of $6,000, so it means that you deposited only $4,000, which means that whenever you are ready, you can deposit $2,000 more anytime. So whatever you withdraw from TFSA, this is how much you can deposit again whenever you're ready. I hope it makes sense. If it doesn't, just let me know in the comments. Okay, I'm Canadian and I'm from Quebec. Yes, go Strikers, go Trackers. Great info. Okay, yeah, no problem, Pete. All the time, any questions like this, feel free to ask. And now back to these people who are waiting for Netflix updates, Peloton updates, and all this kind of stuff. And I have no idea, it's already 40 minutes past, feels like it just been 10 minutes. Okay, now Netflix. So first, if you already remember, I was talking about two groups of companies. The first company is the group Peloton, the second company is group Netflix, or the opposite. First is Netflix, second Peloton, doesn't make sense, doesn't matter, I mean. So, while Peloton are the companies that are extremely, severely, disgustingly overvalued, and at the same time, these are not as great companies as people think they are. They might not sell as much products are not that much in demand, or the product itself is not that good. This is product B, group Peloton. In this group, it's also, I would say, like Palantir, because it's another topic for another video, I don't want to make it 2 hours. But you already know how much I don't like Palantir as well. And another group is group A. This is group Netflix. These are the companies that are still severely overvalued, but at least these are the companies that are actually worth at least half of their valuation. Because I know, I would say every single friend I have, in North America at least, they use Netflix. They are not like, okay, I'm gonna use Netflix for now for 1 month, and then if there are no TV shows, I'm gonna cancel it, and then if I see that there's an interesting TV show, I will use it again. No, they just subscribe and they leave and they make monthly payments. They don't even think about this. So that's it. I don't know any single person who actively subscribes and unsubscribes from Netflix to save this, I don't know, like what, $15 per month. They just leave it like this, leave the subscription on for like years already, and they don't care. They don't even watch Netflix sometimes for weeks or for months, and they're still paying for this. And so these are the companies that are once again big, reliable, strong, worldwide known, and people use their products and services. This is Group A, Group Netflix. And this is my second stage of the crash. As soon as these big companies with hundreds of billions of dollars of market capitalization start falling or start slowing down, or their growth decreases or anything like this starts, they can start falling as well. And because these are the companies, these 10 companies, which you already know which ones I'm talking about, are the ones that keep the stock market up, as soon as they go down, the rest of the market will follow them, which means that those companies which already in the bear market will drop even more. So once again, if Peloton already went down by 77%, if the stock market crashes, it can go as well even more, additional 70%, which means that the stock price will be like $12, let's say so, which is like 90% down from its all-time highs of around like $120. This can very well potentially happen. And once again, another second reminder, after this live stream, feel free to watch my previous video where I'm talking about how stock mania, stock crashes, how they appear, how they progress, how they peak, and how this stock market crashes eventually collapse, and how all these things, all these bad things finally come to logical conclusion, to logical ending. So this is Netflix. So yes, Netflix was growing, millions of subscribers, like hundreds of millions. I'm not mistaken, once again, 250 something like this, 255 million paid subscribers around the world. 250 million people pay Netflix every single month. This is a huge money generating machine, and it does deserve billions of dollars of valuation, even hundreds of billions of valuation. It does deserve it. But as soon as there is slightest hint about the growth that it can slow down, this is the result. 20% in one day, and I will open this right here. Netflix negative minus 35% in the past month, and minus 21, almost minus 22% in just one day. And yes, as you can see here, this is the company that's around like $170 billion in market capitalization. But at least this is big company. Yes, this is money generating company. So many people use the service of Netflix. But that's it. You see, even these monumental companies can be destroyed in one day, as easy as you can see it right here on your screen. What happens when Facebook starts, or I mean Meta starts making like when the growth of Meta slows down? What happens when Apple slows down, Google, Microsoft, all the rest of the companies? What happens then? And then it's going to be chain reaction. Big companies will drag the indices down, smaller companies will be sold even more, and this is when we're going to see the actual crash correction, because right now we're only in the beginning of potential stock market crash. And so I'm very excited to see how it's going to turn out. Okay, I'm seeing more questions, and today we're very, very active in the chat, and I'm liking it so much. And I can see my favorite friend, Mr. Araya. Thanks so much for joining, Mr. Araya. Thanks so much for joining, Pete Griswold. Thanks so much for joining, Investor Nick. Thank you all so much for joining and your question. Okay, now back to the questions. Okay, only moved to Canada in 2018, so I got 29,500 contribution room. Perfect, this is a lot of money, so contribute slowly. No one is saying that you need to do it all at once. No one is saying that you need to do it every month. Just keep your own pace. Just take into consideration that this is the best investing option you can get, because everything that's happening inside TFSA is tax-free. So your first thing that you should do is to maximize your TFSA contributions. After this, think about a personal account or RRSP or anything else you want. Okay, and Pete now says, so transfer it to my personal account from my TFSA in Wealthsimple. So basically, yes, as soon as you withdraw money from TFSA, and this can be, yes, inside your personal portfolio or to your bank account, as soon as you withdraw money from TFSA, your contribution limit increases by the amount you withdrew. So if you withdraw, I don't know, what's the past tense of withdraw? Withdrew, I guess. So if you withdrew $3,000, you have additional $3,000 to contribute. So you freed up the room. So you just took 3,000, now you can deposit 3,000 more eventually. You took out 5,000, you can deposit 5,000 more eventually. So simple as that, this is how it works. So at like 25-50% games, I'm not sure, so please clarify this, Pete Grizzled. I think I already lost train of thought when we're talking about this. So, and then Pete says, but then I'll pay taxes. Low boiler here. So no. Everything that you make inside TFSA is tax-free. When you withdraw money from TFSA is tax-free. Don't worry. TFSA is completely tax-free. And you don't need to wait like in America, you need to wait until 59.5 so you can start withdrawing money from your Roth IRA tax-free. Unless you like there's like first-time home buyer or there's medical expense or there's like tuition, anything like this, you need to wait until 59.5. In Canada, you can deposit money inside TFSA today. You buy, I don't know, like XYZ stock that's 1 cent per share. Tomorrow it's $100 per share. So you make like what, $10,000 on share, $10,000 profit, blah, blah, blah. So you can deposit $1,000 one day and tomorrow it becomes 100,000. You withdraw entire 100,000 to your bank account. The whole entire $100,000 is yours. Everything that happens inside TFSA, everything that you withdraw from TFSA at any time, tomorrow, next week, next month, 10 years from now, is completely tax-free, including dividends, capital gains, anything like this. I don't know, like stock options, like bond coupon payments, anything is tax-free. Everything is tax-free. Okay, and the next question is, go to Florida or Texas. These are free states. Yes, Florida, Texas, Vegas, or not Vegas, Nevada. These are states that there is no state income tax. You still pay federal taxes, but there is no state income tax. So yes, in fact, it does save like 10-15% in paying taxes. And by the way, I am planning to go to Florida for my constant living, or how it's called, permanent residency in Florida about 1 year from now, a little bit less than 1 year from now. So even though I will lose awesome TFSA, unfortunately, I will at least be experiencing the pleasure of having state-free income. Tax-free state. This is what I mean, okay. Okay, so, and Mr. Rai said, I haven't opened the personal yet, but don't want to have to learn about taxes yet. Don't worry, once again, Mr. Araya, focus on TFSA, contribute as much as you can to TFSA, don't open anything else until you maximize your TFSA. This is what I'm doing right now. Until I maximize my TFSA, I haven't opened anything else. First thing you should do is to maximize your TFSA. Okay, let's go, Brandon. I think I heard somewhere. I think I'm missing a meme here, but yes, let's go, Brandon. Investor Nick says, I might buy Netflix, it's so discounted. Yes, it is very discounted. I haven't done a fundamental analysis of Netflix recently, so I'm not sure entirely how attractive this investment right now, but what I can tell for sure is that right now I'm not gonna use like, again, click or something, distract myself, but right now I think the Netflix is down around 40% from its all-time highs, which means that yes, no matter how good or bad its financials, at least right now, it is with 40% discount, which is already good enough for me. Okay, Mr. R says, I've heard it's bad because it's pretty bad to 12%. Once again, not sure, unfortunately, about what you're talking about. I think I should reply to comments faster, otherwise I forget what I was talking about. Okay, so why buy a failing company? Good show. Don't invest money you are emotionally attached to. Exactly. Don't invest money in the company you're emotionally attached to. And this is like, you already know it. Like every single person knows it who started investing like 1 week ago, I don't know, let's say so. This is one of the first lessons you learn on the stock market and investing. Don't get emotionally attached to the company you're buying. Do research. Participate in investor calls if you want, like in quarterly course. I forgot was the original name, was the real name for this, but your earnings call, okay, participate in earnings call, vote for the board of directors, whatever, like, but don't get emotionally attached. It's not like that you bought a company and the company is growing non-stop for like 6 months. It's like up 40% in 6 months, it's up 90% in 1 year, and then that's it. Bad news start coming, like the production decreases, the growth slows down, but because you love this company so much, you will be blind for this bad news. You will only be focusing on good news. This is exactly what we are seeing right now with all these Palantir, Tesla boys, with all these like cultists, let's call them like this, like Palantir this, Palantir that, Palantir the best. Tesla is next world, like Tesla is gonna build Earth 0.2. Like these people, they focus only on good things. There's something bad, they're like ignoring. And they're saying like, everyone is a fool. This is actually good news. Or like Tesla exploded, like blah, blah, blah. Well, actually it's a good news because Tesla exploded and because no one died. Because look at this, like Tesla is so safe, no one died in the explosion. It's a good news, you fools, you don't know what you're talking about. So sometimes it gets as ridiculous as this. So I'm not even talking about Palantir. Palantir is even worse, I think. Okay, so last question. What if I sell at a loss? So, okay, so here is the good question. Inside TFSA, if you sell at a loss, you cannot do anything about this. You'll just lose money. That's as simple as that. Because TFSA gives you good things, but it cannot be way too good, let's say so. TFSA, you don't need to pay taxes, but if you sell at a loss, you cannot use this loss to lower your tax bill, unfortunately. For this reason, if you do lose money inside your personal portfolio, and personal portfolio is obviously the portfolio where you need to pay taxes. So, if you invested $10,000, let's say so, by the end of the year, your portfolio is $9,000. So obviously you lost $1,000. You can sell these stocks, you can lock in your $1,000 losses, and whenever you're making taxes, I guess like what the deadline for taxes, by the way, in end of April, yes? So let's say so you're preparing your taxes like in March. You can put this $1,000 loss, which means that your taxable income will be lowered by $1,000, which means, once again, this is just an example. Your taxable income is $30,000, which means that you need to pay taxes on $30,000, and obviously we're not going to go into tax bracket. Tax brackets was the percentage of this you need to pay. Just you need to pay taxes on $30,000, whatever this number is. But because you lost $1,000 through investing in any other portfolio except TFSA, you can use this $1,000 to lower your taxable income. So now instead of paying taxes on $30,000, now you'll be paying taxes on $29,000, which is obviously 30,000 minus 1,000. So I'm not sure what's the maximum limit you can use per year. So you cannot, let's say so, lose $100,000 on the market and then you will offset this whole 100,000. No, there's a limit as well. So I'm not sure right now. I can answer this question to you whenever after the live stream, for example. So just leave me a comment on Instagram or my next video, or after this live stream, leave a comment asking about this, what's the maximum amount of money I can use for tax loss harvesting. This is how it's called, and I'll give you an answer, because right now I don't want to do a research, because I might find it immediately. I might take 2 minutes to find, so I don't want to make it like awkward silence. But I'll find it for you, Pete, so don't worry. It's interesting and it's a good question. Okay, I was talking to Chat Soti. I should rely. Well, that finally answered my question. Skip a couple comments, haha. Okay, oh, and Half Compton. Via rent, I guess. I'm not sure what is this. I'm assuming I know what is this, but we're just gonna ignore it. And Pete Grizzard says, but your loss is permanently lost or just a fear-mongering? I'm immune to tax logic since I pay too much. Fear-mongering is the word that I heard, but I'm not sure what it means, because English is my second language. So, long story short, your loss is, I guess in some way it's permanent, yes. So once again, if you sell your investments and you lose money, yes, you can use this loss to lower your taxable bill, but you can only use it for this year. So basically that's it. If you claimed $1,000 in losses for this year, that's it. Next year you cannot claim the same $1,000. So what you can do next year, that's it. You paid your taxes, you submitted your tax bill, you maybe got your tax refund or you owed more taxes, whatever. That's it. Tax season is over. You are investing again, and then again you lost money on the stock market, and this time you lost $2,000. So that's it. Now you can use this $2,000 to once again lower your taxable bill. So whatever money you lose in year of investing, this is how much money you can use to lower your taxable income. But once again, there is a limit, which I'll do a research right after this live stream. Okay, so and unless I added to, of course, so basically yes. Okay, so 1 hour live stream, I think this was way more than enough, and I'm so happy to see Pete Griswold, Mr. Araya, and we are missing so much our third investing buddy, Gabe. I mean Gabriel. I even said his name wrong because I was talking so much. After these live streams, I'm not saying anything for 10 minutes because like my voice hurts, my throat hurts, so I need a rest already. So once again, thank you all so much for joining. It was incredible live stream. I enjoyed it so much. I hope you're enjoying my new style videos, because that's it. From now on, every Monday and Friday I have new videos style, where I have like 10-15 minutes long videos, more classic YouTube style. Straight to the point is over. 545 straight to the point videos I've made in 18 months. This is my YouTube heritage. Hopefully you saw some of them. And right now, that's it. It's new YouTube journey, new chapter of my YouTube life. It's not going to be over anytime soon. And every single Friday, we're going to see each other just like we did today. So thanks so much for joining. Let me put myself to say final goodbyes. And I still not using hotkeys to do the transitions because of... Okay, I'm still here. Don't listen to these stream comments. Okay, so that's it. Thanks. So chat next week, says Mr. Rai. I don't reply every day, but cheers, bro. No problem. Okay, that's it. Thanks so much for joining. See you next time. Have amazing weekends, amazing holidays, amazing everything. Thanks so much for joining, and until next time.